Hey there. It's Brian Sewell and RJ, or is it RJ and Sewell? Let's talk. We're glad to be back. We missed you last week. We try to be here every week with you from 4 to 4:30. As this thing going, I think you get to see my ring light here. Maybe I'm gonna do it without the glasses. I can read.
There you go.
I'll let RJ be blind. Well, I'm blind, opposite, right? What's going on, RJ?
Man, things are good.
Good.
Having a great week.
RJ's back in the game, man. He's been in insurance probably for 100 years, back in the Stone Age,
or just 30.
He was covering John the Baptist, and this is Holy Week. Well, John the Baptist right here at this point, but anyway, no.
Hey, you know what? Mentioning that, just something that I'm grateful for real quickly. I know we started doing that a little bit. Yep. This is the week that we celebrate everything that Jesus did. You know, his whole walk, his reason for coming to earth to redeem us. And at the end of this is going to be, the celebration of his death and resurrection, where we by which we achieve or we're given the opportunity for salvation. So really grateful for that. Glad that God loves us the way he does.
Amen, brother. And that's right. And I'm glad we started. So I would say, I mean, just really, we don't get to enjoy any of this. I mean, you see this little sign behind me, right? Not ashamed of that, right? Mm-hmm. But the thing is, when I look at why we're here, I meet with men. We meet just about every Tuesday. We didn't meet this week because of Holy Week, but we do a little small Bible study. And we were talking about like, hey, RJ, you're not called for insurance. I'm not called to be a mortgage banker. I know we do that. That's the vehicle we use, but we're called to be light in darkness, right? So to me, it doesn't mean we judge. You and I had an in-depth conversation earlier about some crazy people that we know or we know of, right? But It's about we show love, and it can be a challenge in some instances, right? With certain people. But how much is it harder for God to love us, right? So I think that this is an opportunity we're going to get to talk to you about mortgages, what's hot, what's going on. We're going to talk about real estate, but I think it's so important that you get to know us as people. And part of knowing us as people is that we love God. We honor God in everything we do. And to me, that's the most important thing we could do. When you're done, when you get ready to take your last breath, you're going to say, hey, wish I would have made one more phone call. I wish I would have wrote one more deal, whatever that looked like. It's going to be a bigger perspective. So thanks, Sergeant, for kicking us off with that.
Absolutely.
Yeah. So there's a lot of uncertainty, a lot of volatility in the market right now. And RJ, I know you've got some topics you want to get on for the life insurance, which we're going to get on that. But one thing I just want to kick the show off with is that right now, homeowners are sitting on record levels of equity, right? Like ridiculous record of equity. But a lot of people don't know how to actually use it. Right. Yeah. So we've got a lot of cool things. We got a new product that allows you to tap into your equity to buy other properties and things like that, or to debt consolidate, anything like that. I have my first one closed. He signed up 2 weeks ago and he closed last week, literally all online. Boom. We'll give you the link to do all that stuff. I know they're doing some updates, so I'll give you access to that where you'll be able to just boom, do that. You got to be a homeowner. You can use this equity to buy other property. You can use this equity for whatever you want to use it for. I think it's a really cool tool, which we'll touch a little bit more bases on this as we go through this call. But if you're someone that needs, and you're sitting at a 2% interest rate or 2.5% because you worked with me a long time ago, you can still tap into your equity to buy other properties to help leverage, to help you build wealth. RJ and I talked about this too. Starting next month in May, every third Saturday, we're going to do it virtual and in person. We're going to be doing basically a buyer's webinar and in-person webinar. You can come in and see us too for helping you build wealth through home ownership. So whether you're a first-time buyer, second buyer, you want to buy investment. So we're going to go in more depth. You get an hour with us, get a little treats with us and talk and rub elbows. We're going to have some fun with it. So we're going to tell you more about that in a little bit as well. So, but if you're a homeowner right now and you're nervous or you don't want to refinance, but you need to do some debt consolidation, hit us up. We can probably get it done for you as fast as 2 weeks.
That's pretty sweet. Man, you mentioned something in there. You talked about the record levels of equity that people have in their homes right now. And you named a couple of things, debt consolidation being one of them.
That's fine. That's fine.
Yeah. Sorry. But you mentioned that. What are some other things that people could do with the equity from their home?
Well, debt consolidation is one. We just did one for someone that closed on Monday, actually. So they actually did do a refinance, but it made sense because we saved them $1,500 a month, right? So, but
definitely worth it.
Yeah, right. So they started over a little bit, but we got a plan and things in place. So debt consolidation, people help pay for their kids' college, tapping into equity, right? They've vacations, which are not necessary. I'm not judging you. I don't encourage, because I think, if you're taking out equity, let's save money or pay off some debt. They buy other properties. So we've, like this equity loan, you can actually use that money. And we also do an investment loan that's called the DSCR loan, which is debt service coverage ratio. And we're going to talk more about that as we do start our seminar next month. But we're just going to educate you guys. That's something me and RJ really believe in. But again, you can take the money to leverage it to help you buy other property that goes up in value, which I'm going to show you a little bit of that today. RJ, don't let me forget. I know the show goes by so fast. We do 30 minutes. Once we build this thing up, we might go a little longer. RJ doesn't know about that. He's getting voluntold. But, again, debt consolidation, equity to buy other properties, to buy other investments, kids' college fund, this bail money. I didn't even think about that. One of my coaches for Lamont told me about it, and we had a little training on it earlier. Is that, unfortunately, listen, guys, you don't want to go to jail. Some people get arrested for the wrong reason, but if you need money fast, you get your money as little as 5 days. I'll tell you, in Illinois, it's probably more like 10, because you need title docs and recording and stuff. We take all day to do stuff here in Illinois. God bless our beautiful souls here. But any of my politicians that listen, just get things done faster. You're gonna lose the bears if you don't. Just do it. Just sign doggone paperwork, man. Come on, please. Everything's so doggone hard. Sorry, give me off focus. That's my AD. Kick it in. Just sign doggone paperwork. Keep them in Schaumburg. What are they going? Not Schaumburg.
Arlington Heights.
Arlington Heights, yeah. Same difference. Schaumburg, Arlington Heights, they all the same. They're in the vicinity, right? That's like, 20 minutes from each other, 15 minutes. Sorry, I'll digress. But yeah, that's where was I going with that, RJ? You can you can get money for bond. They brought that up. So hey, if you need to bail somebody out, you need access to cash real quick. That's another way of getting it. So. And then once that's up, I'll put the link back into this page for you to do that. So we'll have it. You could, again, you find out within minutes for offers. My guy had an approval within an hour.
Nice. I think one of the things too is, especially today, people, and this time of year, people are talking about, how do I save money on taxes? How do I, get a larger refund or pay less in taxes? And one of the best ways to do that is by starting a business, right? And if people are really looking to launch a business, I think they could use the equity in their home for that as well.
Yeah, you can fund. You could do, like, if you think about it, any type of business. Let's go back to my DSCR loan. We closed those in the name of the LLC. So technically, if you're starting a business, that's real estate, right? You want to start a business, you want to call it RJ and Sewell LLC. RJ, we may think about that, brand that. Then we're going to go buy a bunch of properties. We could do that. You got to put 20% down. You got to have good credit, right? So good credit, 20% down. Boom. You could buy other properties with that business and stack as many as you want. Really quick, and I just thought about this because I didn't have the guides because it's so new. For that HELOC, this digital HELOC we have, minimum credit score is 640, 75% CLTV. So you got to have at least 25% equity. That's the max amount we'll go up to. 680 FICO, we go up to 85% CLTV to get access to your equity. And 760 to 850, you go up to 750K loan amount at 75% LTV. So there's things you could take the money out and do. Not saying you to take all this cash, use it to leverage to get other things. Again, I don't recommend going on a shopping spree.
Right.
But you can do other things, right? I've seen people take out money, this is the sad part, that they don't have a long time to live. They take out money and they say, hey, I want to take that dream vacation. I don't know if it's a good idea to go overseas right now, but go to Italy or whatever it might be, and you plan it out. So that's another reason I guess you could put in there. again, 5 to 7 day close. We do a really quick AVM for properties under 400,000. If it's over $400,000 loan amount, then you're going to do an appraisal. So we order to, but I got the guides. I closed one already. I got a couple more we're working on. It's a really good product. And Guild being such a big company that we are, I mean, that guy, we from what I understand, we've closed about 200 of them already, and we just brought it out a month ago.
Very cool.
Yeah. So.
Okay. Yeah. So a lot of great things you can do with the equity in your home. Interesting. You mentioned, if you have a terminal diagnosis, you can take money out for that as well and take that dream trip. We actually have a provision in our life policy for that. And so if you receive, and it doesn't cost anything additional. It's a part of every policy we sell. If you receive a terminal diagnosis and you're going to pass, you're scheduled to pass within 24 months, then you can take up to $250,000 or 75% of the face amount of the life policy, whichever is smaller, and you can literally do anything you want to with it. So it is, it could be bucket list money. It could be, you could give it away. You can do anything with it that you want to.
Okay.
Yeah.
That's pretty cool. I saw that movie, The Bucket List. That was a good one. With Morgan Freeman, right?
Absolutely.
That was a funny one. Yeah, but no, I'm learning stuff right here. Switching gears a little bit, as I want you to touch base more on that, RJ, because I know some things were on your heart about life insurance and being properly prepared for it. That's one of the things I always loved about you, that you educate. And I was kind of mad at you when you decided not to sell insurance anymore and take a little break and whack back. But this is my buddy, man, my partner. So, but no, talk a little bit about what we discussed today about insurance and being properly prepared, and sometimes not being properly prepared, and how that may affect, others in their age or older age life. Yeah.
Yeah. So there's a couple of different things. I'll get to the one that we talked about earlier today, but not being prepared. So I want you to think about, what would it look like if you contribute financially to your household? What would your family do if they no longer had your income? And, we always think about insuring the house and the car. The house is, when you have a mortgage, it is mandated. The mortgage company is going to make sure you have insurance because they have a financial interest in making sure that house stays to value. When you have a car, the state mandates that you have at least liability protection. But if there's a loan on the vehicle or a lease, again, the bank is going to make sure you have damage protection as well. So those things we never really think about. But if you don't think about protecting your income for your family, all of that stuff can go away. So your policies can lapse for non-payment. You can lose your house. Your lifestyle changes dramatically. So there's a ripple effect for not preparing for death, which is a certain thing. We talk about, I think Chris Rock talked about if insurance. So
I remember
because
I teased you about that on in case. If stuff don't happen, right. We use the other word.
Right. But the home and the auto, the umbrella policy, the business policy, those are all in case policies. But the life insurance, that one's going to happen. The only thing that can stop us from using a life policy, a couple of things: if we let it lapse, if we never buy it, or if we let it run out, or if the rapture happens.
Yep.
Right. Those are the only things that are going to stop you from using a life policy. Otherwise, we're all going to die at some point. It's tough to talk about sometimes, but we need to have that conversation so that when we do pass away, we can, our loved ones don't have to resort to a GoFundMe page. So that's the first thing. The second thing, and this was what we talked about earlier today, I'm actually working with a customer right now who is a senior citizen. They are retired. They're on a fixed income, and their life policy that they bought before I became their agent has now gone to what we call annual renewable term. So let's say, for example, you have a 20-year term policy. That policy premium, what that means is the policy premium stays the same for 20 years, there is no increase no matter what happens. There's no increase in that policy premium for 20 years. But a year 21, if you keep that policy or don't let it go, what's going to happen? It's going to automatically renew, except the premium is going to jump significantly. And then every year thereafter, that premium is going to jump again. Annual renewable term.
I'm trying to get them to engage a little bit.
Yeah.
Yeah.
So annual renewable term. The goal, and this is why your agent is so important. It is your agent's responsibility to talk to you about that life policy. And I mentioned this to you too. Term policies, a lot of times don't pay out because they become annual renewable term and they're no longer affordable, or because people let them go and at the end of the term and they don't get another policy to replace it. The policies that always pay out, if they stay, as long as they stay in force, are the permanent ones. Okay, so it's the agent's responsibility to talk to the customer, let them know what their options are before they happen and before they can't afford to pay for premiums any longer. So if you have life insurance, make sure you are talking to your agent about what comes next and what should be your next plan of action. If you don't have life insurance, please give me a call. Let's talk about it. I'm never going to sell you a policy that you either can't afford or is wrong for you. It's always going to be what's best for you. But I want to make sure that you are taking care of that.
So a question I hear sometimes or people are nervous about is that, is it, I know what term is for, right? Term is you can make sure you're covered a certain amount of time. You're hoping that you have enough money put up to have things taken care of as you get older. But my question for you is that what if somebody has a pre-existing condition, right? And they're older and they're like, hey, I didn't get the insurance like I should have when I was younger. Do you guys have options for people like that as long as they're in good health now still?
So that's a great question. So we have some policies that are, there's underwriting for almost every life policy, but when you're younger, you tend to be in the better health. And that's one of the reasons it is really important even to get life insurance on a newborn. Get that insurance as soon as you can. One, because the premium's never going to be less expensive than then. And two, you are protecting their insurability. Okay. So, but as people age and we develop health conditions and so forth, you can still potentially qualify for life insurance. You may have a policy that we refer to it as rating the policy up. So you'll pay a little bit more premium for it, but you can still qualify. And that's still really important. And then there's some people whose health is so impaired that we can't write them a life policy, or, they've reached a certain age where they can't qualify for certain types of life insurance. So now they are pigeonholed into we have a senior life policy. It's whole life insurance, but the face amount is limited. Okay, so it's basically a final expense policy, okay, just to pay for burial. So there's a lot of different options. The idea is to talk to your insurance advisor or me before you run out of eligibility.
Makes sense. Okay. Yeah, and I appreciate it. We got some thanks for sharing these great insight. You guys are both doing good dudes. Keep looking up. All right. Thank you. I appreciate that, Drew. Really do appreciate that. So here's another thought process on this, right? So let's say we got someone that's, let's take somebody like me, right? I got insurance. What if I want to get some more, right? So I'm 46, I'm diabetic, A1C is good, right? Putting my personal information out there. I don't care, whatever. A1C is good, and let's say I said, hey, RJ, I want another 20-year policy. So by the time I retire, we'll have more than enough money and I won't need your insurance anymore. What would something like that cost me in decent health? I look halfway decent, right?
Yeah.
You're gonna rate me because you've been diabetic since you were 3. So I don't.
So, it's a great question. And, without sitting down and talking to you, there are a lot of factors that go into what the premium is going to be. The face amount, or what we call the death benefit, is going to be a big factor. Your age is going to be a big factor because the life insurance premiums are based on what we call a mortality table or mortality chart. We expect, with people living longer now, it runs out to age 120. So the premium is based on, what would it cost, to insure you for this long or whatever, right? So you got your age, your health, and the face amount is. I think I mentioned that one, but health is always going to be important as well. So if there are some things, we talked about. So I have a buddy who I used to play basketball with, and this guy was always had great energy, never seemed to get tired, and all of a sudden at age, I think around 30, he needed a pacemaker. Okay, so now at age 30, he and in the blink of an eye, he in a 1 day span, he went from insurable to not insurable. So yeah, there are different things like that happen, and we never know when. There are accidents that cause death. We don't like to talk about it, but we have to prepare for it.
You got to plan for it. So I'm a numbers guy, so I'll be like, hey, you said the deal is 25. Put me on the 20, or put me on the 24.5. Right. We have our little stat sheet up, like, okay. But I'm having fun. But get something, guys. It's hard. We see it in our communities a lot, that a lot of people don't have it, and and that's something I think we should, and not just ours. I should say, I talk to everybody, and that should be part of your financial retirement plan. I think. To some degree, you should have insurance, home, things that go up in value or that can protect you, right? So I think it's important, RJ. I appreciate you for sharing all the great tools, as you always do.
Absolutely.
I want to talk quickly about this. I know we don't have a lot of time. So this has been coming up a lot regarding, and we're just going to touch base on Illinois. We're licensed in other states too, guys. I'm licensed in 9 other states. So you're listening from other, reach out to us, and my company's licensed in 48 states. But here's the thing, like rising costs right now, monthly costs, taxes going up, insurance going up, right? Well, I'm going to talk about the taxes, right? You can speak on the insurance. You're going to have to do a 2-minute version because it's 426. Taxes in our beautiful state of Illinois is ridiculous, guys. They've gone up. And so that affects your monthly payment. So there's been adjustment. We probably fielded this week alone 7 or 8 calls just on taxes. And that's for us. I think Sonia had more, and just explaining to clients why those bills went up so much. And it's just, unfortunately, the state of Illinois, is particularly in Cook County, pushed heavy on the taxes last year, and even went up some this year. So, what you can do, there's a couple of different ways of managing that. Number one, I want to bring this up because a couple of people I talked to today and yesterday, they don't have their homeowner's exemption. Look, file for your homeowner's exemption. You get a discount for living in the property. In Illinois, you get up to 3 years. They'll give you your money back. Okay. And matter of fact, if you don't have your homeowner's exemption right now, go file right away, whichever county you're in, because you get, I think, to April 10th to get it to apply. Now it might be April 12th, but file right away. Get your discount. And you get up to 3 years to get the refund. You can still file it, but I see so many people that have been living in their home for 10 years and don't have their homeowner's exemption. Why are you giving the highest tax state in the country more money?
Right.
So I just wanted, that file your homeowner's exemption, and the other is potentially, financing that out for a short period. If you're on a fixed income, and it might be a potential for you to refinance and lower the payment too. So either way, we'll give you the information. We're here to save you money first. RJ, talk about the insurance premiums while you guys are jacking us up. Sorry, I didn't say that.
Yeah, so it's actually a question that obviously I hear a lot, right? Insurance premiums have been going up fairly dramatically. So I want everybody to remember this. People ask me, I haven't had a claim. Why are my premiums going up?
That's a great question.
It is. There's a company out there that says you shouldn't have to pay for your neighbor's claims, right? But yet we do. We all do. The basic principle of insurance is that we pool our financial resources so that when there is a catastrophic loss, no one is left holding the bag for their own repairs. Imagine what it would look like. Yes, sir.
I'm being bad.
Oh, go for it.
I agree with you, RJ, but I'm going to be like one of my special clients. And, so in that case, and RJ is going to educate. We're teasing, having fun, but, sure. What about the times we don't have any claims? Can we all put the money in the pool and spread that back to us? No, I'm just
So I wish.
I'm teasing you. RJ's a good dude. I got to give him a little hard time about his insurance. He knows,
Absolutely.
But go ahead, RJ. I'll shut up and listen.
No, so what happens is, if you would imagine that we were all self-insured, that there was no insurance company, right? How many people would have the financial wherewithal to be able to repair their car after an accident, or repair their home after a fire, right? So when you think about those things, there are societal impacts to what we do. When we look at, what as a corporation, what we're trying to make is, I don't know, 3 to 5 cents off of each dollar that we bring in premium. So we're not looking to gouge people. We're looking to be properly rated or properly priced so that we are able to pay all the claims that we owe. And that's one thing that I love about our company. When we owe it, we pay it, period.
True.
We don't quibble with, wow, that's a big check, I don't want to write that. No. If it's a big check that we owe for a claim, we're going to write it. And that is one of the things that keeps me with the company. I know how we handle claims.
You've been there since they started. I mean,
you know what? We're actually, next year, we're coming up on 100 years in existence. We were founded in 1927 in Madison, Wisconsin. So we're coming up on our centennial. It should be a fantastic year and a celebration with our policyholders.
Yeah. But that's good, man. We started in 1960. So, I mean, that's where you guys have been almost 100 years.
Yeah.
You're right. Yeah.
Yeah. Yeah. And, not a lot of companies make it to that many years in business. So I'm really proud of that. But I'm more pleased with how we do business and how we take care of our customers. With regard to the premiums, there's a lot that goes into it. Every time there are, technology in a vehicle, for example, I remember, and this is going back, I remember when windshields in a car used to cost $300 to replace. Then they put the rain sensor on there, went up to like $1,100. And now there's the lane keep assist and all the other technology. So when your windshield is broken now and you have to replace it, it's about a $3,000 replacement. So if you imagine, what it costs that's a tenfold increase on the cost to replace that windshield. Well, what does that do to the premium? Obviously, it has to go up as well, right? When we go back and look at COVID and the impact that it had on the supply chain, the supply or the demand stayed the same or maybe even went up, which means now with a more limited supply, the cost is going to go up for that same item. And that impacts repairs on buildings, impacts repairs on vehicles and everything else that we deal with. So there's a lot that goes into the premium rising. I'm a customer as well. I wish it would go down, but that's not our reality. And again, above all else, we want to make sure that we are collecting the right amount of premium so that we can pay every claim that we owe.
No, that's good, RJ. I appreciate you can see that he educates you, man. He makes you a lot smarter about insurance, even if you don't want to be, but you need to know.
Absolutely.
So RJ, they need to reach you. They just email your rjames1@amfam.com, right?
You got it.
Okay, or you email me regarding mortgage questions at teamsewell@gillmortgage.net. Man, I'm grateful for you always. This 30 minutes go by. As we build this thing out, we may go a little longer. I think that's the plan, but we want to educate. We want to hear your feedback, hear your questions. I want to wish every single person a happy Easter, happy Good Friday, Resurrection Sunday coming, right? That's my heart. We're gonna always that's how RJ and I roll, man. We're not gonna be ashamed to tell you God bless you, right? It's
absolutely
a real way you got to tiptoe over what you say. No, but no, we're grateful for you. If you got any mortgage questions or insurance questions, we're here to help. We want to be a resource for you. Yes, we want to earn your business. RJ ain't gonna ask. I've taken coaching for like 12 years, and I've been a coach for the last probably 3 or 4. And look, one thing I've learned is always ask. So the good books that you have not because you ask not. Right. If you know someone looking to buy, sell, refinance, give us an opportunity to help you. Give us a call. I'm going to put my cell phone in here for text. Just simply text HELP, and that's 773-875-7640, 773-875-7640. We promise to get back to you. I'll get you back over to RJ. You can email him. We're going to love on you. We're going to take care of you. We're going to be honest with you, which is important, right? So many people go through so many different companies that they got hidden agendas. And we're not talking bad about that. We're saying there's no hidden agenda. We want to earn your business. You go in Target, you go in Walmart, you go in all these places, you spend money. Help us, let us help you, right? And then maybe it's not time to buy a house. Maybe you're waiting 3, 4, 5 years. That's okay. We still educate you. So give us an opportunity to help you. Again, enjoy Good Friday. Enjoy your Easter. Enjoy your family. And we're always here to help. Anything you want to add on, RJ?
Yeah, all of that. And don't keep us a secret.
Right.
Please, I see a few people on here with us today. Thank you for jumping on with us and your engagement. Don't keep us a secret. Let others know about the podcast, and more importantly, let them know that we're here to help. So pass our information along. We'll be glad to assist.
100%. Oh, we got Power Agent Wendy Lee coming on next week with us. So she'll be on 4 o'clock. She's big on social. So she'll educate you on what's going on in the market, things like that. I'm excited about having her on. And so we'll be there next week for that. But God bless you. Enjoy your weekend. And we'll be next week.
God bless you all.